Welcome to Rich Keys channel, where we unlock wealth one candle at a time. Here charts don't lie and neither do we. The stock market isn't gambling when you apply the science of statistics and probabilities, along with proven technical strategies. Get smart with technical wisdom for your financial journey. Subscribe and join us on this journey to wealth investing and trading the financial markets.
Disclaimer: not financial advice. The information provided on this channel is for informational and demonstration purposes only, and should not be considered as personalized financial, investment, or trading advice. Risk warning: all investments carry risks, including loss of principal. Do your own diligence. You should conduct your own research and consult with a qualified financial professional before making any investment or trading decisions. No liability assumed. We are not responsible for any financial losses or damages that may result from your use of the information presented.
Today is 28th of June 2025. It's about 11:25 a.m. Saturday morning. The markets are closed, and I'm analyzing the charts to see where these charts would take us next. So today, my first pair that I want to look at is the dollar index, and I'm starting off from the monthly time frame as the month is almost also closing. So on the monthly, we are having a red bearish candlestick, suggesting that there is potentially more downside to the dollar index coming into the next month of July. However, what I'm paying attention to from the monthly perspective is how stretched we are on the Bollinger Band. We are on the outskirts of the Bollinger Band, not yet outside the monthly KC channel, but on the Bollinger Band, we are outside it. And we are also in a support zone. And this support zone is a trend line that I have on my chart that goes all the way back from 2021 to 2011. Okay, so 2011, it formed this base, and I connected this trend line to a support base that happened in 2021, and we have come to it in 2025. And so I'm logically expecting some kind of a reaction, a support um, from this zone. And in my previous video I did last week, that was my target, and we've actually exceeded my target of 96,801. That was what I had on my chart from last week. So in the coming week, I'm expecting a retrace, not a reversal, 100% reversal. I'm expecting a retrace from about this level to somewhere, probably let's go on the weekly or the daily time frame. So this is the weekly time frame, and again, with the weekly, it's even clearer that we are almost outside the KC band as well. Not quite to the end of the Bollinger Band, but the KC channel. And most times when you get outside this KC band or Bollinger Band, you should expect a reaction, especially if it's within a support zone. On the daily chart, it's beautifully shown here, where we're getting these rejection of price, or more or less, as I call it, selling being absorbed with these long wicks outside the daily KC channel band, as well as you can see on the daily, we outside the Bollinger Band, well outside the Bollinger Band, which means that we are quite overstretched in the selling. There is other things on this chart that I also want you to pay attention to, and that is the gap that was created from June 26th or 25th into June 26th. So I'm expecting this gap to be closed sooner than later, as price level here is being absorbed. I think on a lower time frame like the hourly, expecting that this bottom that we created here, so let me bring this arrow here. So this bottom that we created here, all this here, 1, 2, 3, price came to these same levels, and every time it came, it bounced, came, bounce. And this one had a stronger bounce. However, we haven't crossed the 50 period average on this 1 hour chart yet, suggesting there's resistance above. But I'm hopeful that based on what I was showing from the monthly time frame to the weekly, that we may get a bounce from somewhere here and make it to a target zone of 97 223. Somewhere within this box we could get right here. We could go a little bit into this box as well, but this is my target zone for the dollar index coming into next week. And like I was saying, it would also fulfill the closure of this gap that was created on the way down. I don't expect it to go beyond this resistance zone here that was created. So here was a previous support that now turns into a resistance, and I don't expect the dollar index to exceed this level. The next pair that I would like to investigate is the Bitcoin asset, and Bitcoin is on the monthly time frame, doing a nice rally. This bull market that started somewhere around 2022, apparently, we all missed the beginning, but this has just been on the tear since 2022. So the bull run is still intact, and anyone being bullish on Bitcoin is still in the right direction from the monthly perspective. We're still in a nice uprise above all our monthly moving averages. Um, the only thing I'm observing on this monthly Bitcoin chart is the extent to which price has moved towards the KC band. Now, usually when we go outside the KC band, that is not good news. So for now, Bitcoin price within this monthly chart, we're still within the KC band, suggesting that there's a potential that we could go outside the band in the next coming month. But at the same time, once you're at the edge of the band, you need a catalyst to be able to go outside the band. Without the catalyst, this is probably just going to go sideways, uh, maybe into the next month. And should this month end in a green candle, we still got a few more days to close the month, or an indecision, then as I was saying, my observation is that we might go sideways. Bitcoin is one that many people are quite interested in, so I'll devote a little bit more time to it. And this is a weekly setup on Bitcoin as well. We're getting a weekly candle that is potentially going to close in a green, uh, probably I'll call it an engulfing candle. I've been looking at it carefully since it started. If the chart closes like this by Sunday midnight or Sunday US or open time, which is about 7 p.m., um, then yes, I would expect us to go and test, probably break out into the new high or test this 112 level again. There's no doubt in my mind that if we close this candle with such a bullish engulfing candle, that we will not be able to go up a little bit more. Um, However, what I'm also observing is the indicators, and it looks like I say, yeah, if we close like this, we probably would make another wave up. And who knows how far that will go. Maybe 115, 125 could be a potential target. But we need the close of this candle to be able to really confirm that. For now, I'm leaning that this potentially can go up. On the daily, we're already at cycle high. And I like this daily chart because it gives you the granular level what is happening. Um, and as someone would call this, these are two potential bullish patterns that is created on Bitcoin. If only we could break above the 112 level. So here is a flag. These blue lines that you see here, that's a flag. And that's kind of a bullish flag formation. This is a peanut triangle here. Right here is a peanut triangle. But all these patterns would only be strongly confirmed once we are able to break above this level, which is above um, 109, 200, 300. But it will be more clearer to us once we break above the 112, 112,000 price point. If not, then I'm expecting this to kind of hit the 108.9 and probably just bounce back down. At some point, it's going to exit this triangle, or it's going to also exit this flag one way or the other. If we exit on this upper side, that's very bullish, and if we exit on this lower side, it's going to go down quite a bit more. So for now, I see Bitcoin, as I said, from the higher time frame, as going sideways, still within this channel, coming into July. I don't know how far it would go into July, but I would assume from now to about probably the next couple of weeks in July that Bitcoin is within this range. There are a few indicators also pointing in that direction. As I said, we have a cycle high here on the daily. Potentially, we could just pull back and just go sideways. MACD is up, so leaning up onto the bullish side. The one thing on the monthly RSI, monthly RSI that I would like to also note is this. Okay, so if we are not able to go break the 112 high, then we are consistently forming lower RSI highs that would suggest a bearish divergence in price. Okay, so this was one RSI divergence that brought us down. And if we don't, then I'll consider this as a lower RSI high. And that will probably just, bring us down coming into the month of July. So that's my assessment on Bitcoin, that it goes in a range sideways, potentially, yeah, potentially just go sideways between this price zone and the price zone of maybe 98. The next asset that I'd like to also discuss is the S&P 500 Index Fund, and that is looking very bullish at the moment with some caution. I'll point out the caution to you in a bit, but this is one that has not shown any signs of weakness in this V-shaped recovery uptrend. Been in uptrend, 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 and this was the correction, huge correction that we all missed the opportunity. Some of us missed the opportunity to have been buying instead of sitting on the sidelines. But we had a bullish candlestick last month, and we are also completing another month with a strong bullish candlestick. Very minimal wicks on these candles, suggesting that the buying pressure is there, like solidly bullish. We also not outside our KC channel band, neither are we outside our Bollinger Band, suggesting that there's potential for more upside targets. The only caution I'm seeing on XPX is the volume. Okay, so the volume is spelling out caution to me. Usually, when you want to break into a new all-time high, I want to see significant volume come in. And looking at this volume that we have, comparing to the previous month. So this is the previous month volume that we printed. And if you look at this volume compared to this, going into a new all-time high, this volume is lower than this. It tells me the volume is drying out, which potentially means that yes, we could probably inch up into next month, but it will be probably short-lived um, before a pullback occurs. And when you step down to the weekly again is showing you a strong bullish candle here into the resistance of the all-time high. We closed above the all-time high, but there's also, like I was saying, if you look at the weekly volume, for a candle that breaks into an all-time high, you want that candle to be strong. Just as this reversal candlestick was one that was so strong with a good amount of volume. Like I said, the volume has been declining as we are going up. So there is a volume divergence that have been in play throughout all this bullish recovery. Um, when this would turn around, for me, until we break below the 21-day period average on a daily chart, this uptrend is still intact and should be respected. On Friday, we did break out again. I'm looking at the volume on Friday. So this volume here was quite weak, and this is the volume that broke into the all-time high. Good news, it's an open and close above the all-time high. Previous all-time high was here. Okay, so it's an open and close above it, suggesting that this could go further up. However, we also outside our Bollinger Band and as well as our KC channel band, suggesting also to me, as I noted from the higher time frame, that the further upside will be short-lived before a correction, a pullback into the channel. Yeah, so as I was enumerating that the upside for the XPX 500 is one with caution, because we have retested the previous high and bounced off of it means there's a likelihood that we shall continue going up. But let's not forget there's a lot of pressure building up as we creep towards the destination target of 6,265. Um, I don't expect this to cross this level with ease, as there's a lot of selling pressure, uh, you know, being built on the lower time frame. So this is the 4 hours where we couldn't close above the last 4 hours candle, telling me that potentially when market reopens, there could be some pressure to sell. Now, charts don't work in isolation. Usually, there's always a catalyst somewhere thereabout, and who knows if the July expiration tariffs would change this picture. So just if you're already in profit, lock in some profit, but don't exit, as there's a potential for us to continue going up. Yeah, the next pair that I'd like to look at is the NASDAQ 100, and the picture is no different from the XPX. This is the monthly chart, and the monthly is looking very bullish. Had a monthly hammer here that pushed us 2 months straight up into the new all-time high. The only question that we're asking ourselves is, are we going to continue creeping high, or are we going to have a pullback or a reversal at some point? I mean, based on this candlestick that we printed, both on the weekly as well, this is a very bullish candlestick. I expect us to inch up into next week, a potential target of 23,384. Although I would say that there's a little bit of hesitation going up. So if you buying into the market now, know that you're buying into momentum, and momentum could die out as we move higher. Um, Volumes are pretty healthy. I have a cycle high, which is strength, but it also means that the strength could be coming out anytime soon, similar to what we had here, okay, or even here. So, yeah, based on this setup, I expect Nasdaq to inch up to its target on 23,384. On the lower time frame, like on the hourly, again, as I was saying, nothing works in a vacuum. If news comes out the next couple of days, next couple of weeks regarding the tariffs and everything else going on in the world, yeah, this picture could change. When they announced that Canada was no longer having the talks with Trump on the deals, we could all see the sharp sell-off that happened. However, good news, it was quickly bought back, and that we closed lower than the hourly high. A lower high on the hourly suggests that there could be some amount of selling pressure as we creep up into the target on the all-time high, and that's somewhere around 23,384. If not, then it will mean this is the tops. But based on the monthly and the weekly candlesticks that we have printed, I am quite uncertain to call this the tops. I think this could potentially make it move up towards the target. So that's it for the weekly analysis. The last pair I'll briefly look at would be gold to wrap up the review. Yes, and gold did not do exactly as I was expecting when we had our bullish candlestick last week, and I was expecting this to go break the all-time high. To my disappointment, we come back to the 50 period support line, and we have actually closed below the 50 period support line. As you can look, ever since we started this uptrend, um, gold never broke the 50 period average. So this is a place that I would sound a caution or a warning bell that come into next week. If we are not able to reclaim this 50 period average, I would expect more downside on gold with a potential target to probably somewhere around 3150. Yeah, 3150 will be my target for gold if we are not able to reclaim the 50 period average coming into next week. And that's it for this weekend review. I appreciate your time for sticking with me and sharing our ideas and our thoughts together. Have a great trading week. Cheers, everybody.